Good morning, everyone. In today's video, we're going to give you an update on the current market conditions. We're going to take a look. We'll look at the Nasdaq, Bitcoin, oil, and also some companies, including some Chinese ones, and so on. Before we begin, I'd like to ask you to pause this video for a moment and read this disclaimer. Obviously, this states that we are not financial advisors, but are only providing general analyses. So what's important? I'd like to start for a moment with the Nasdaq. Still within the premium group regarding the Nasdaq, just yesterday evening we were talking about the fact that we were quite bearish, simply because for some time now, if you go back and watch the last public video on YouTube where the Nasdaq price was above $25,000, we were particularly bearish there, in the sense that we kept thinking that this type of movement was a kind of relative distribution, which would then lead the price down. Rightfully so, to correct, also because basically, since the start of the Trump pump, after the tariffs, the Nasdaq has never had a retracement. As a result, it's more than healthy to see one of these, even in the coming weeks. Obviously, it's just a probability, but we think this is the scenario. The higher probability is for this to happen, rather than seeing a continued upward trend. As a result, also in the premium group, last night we were saying, Nasdaq weak and unlikely distribution. It wouldn't surprise me if, as long as it stays below the macro resistance, which is this one here, it could then make a sort of lower low towards the intermediate VWAP, which would fall roughly around these areas. In fact, in the note, we've already seen the first bearish reaction, so we've already seen a minus 2%. And this type of signal, obviously, then also drag down the rest of the stock market, which we'll probably see today when it opens after 3:30, going down. Obviously, it's now 10:45 in the morning, so maybe this video will come out this afternoon, but in any case, we're not expecting anything too positive, not necessarily today, but certainly in the coming weeks. Consequently, our outlook on the Nasdaq, at the moment, it's a bit hesitant, or rather, it's quite likely that we should expect some sort of downturn. Important point, an update on Bitcoin. For those who know how to use the RSI decently, not as a classic indicator, but who have enough experience using it, they will generally know that when you start drawing such steep trend lines, especially under trend lines showing bearish divergence, so flat you'll generally know that with a very high probability, a pattern like this almost never ends well. Meaning that usually, where the trend line is steepest, over time it tends to break downward until perhaps a bullish divergence forms on the time frame. On larger time frames, or in any case with a much less steep slope, which then leads to a sort of reversal. The problem is that this type of slope where we are now is literally too steep. So now I don't know if from here we will go up towards this resistance here, which in this case would be around 72 or 74,000, or if we should break it directly to the downside. All I know is that with extreme probability, the final scenario will be the same. That is, this low here at 60,000 is not the bottom, but it will be broken to the downside with greater probability, meaning that either the price does something like this, manipulates above here, above 70,000, and then goes down or drops straight away. This is probably also linked to the bearish direction that could also affect the stock market sector, like the S&P 500 and Nasdaq. But in any case, in the end, the most likely scenario is a bearish break of $60,000, precisely because this type of pattern is generally weak. Furthermore, looking at the liquidation heat map, which is the chart that highlights the areas of greatest attraction with more prominent points, or rather, it's not just about greater attraction, it's, let's say, a liquidity that it generally represents the stop losses of people who are both long and short. In this case, it's true that it's very close, but I wouldn't take it for granted that this would be taken right away. Why? Because it has happened very often in the past that market makers, in order to later create a short squeeze, leave fairly significant liquidity zones precisely in similar situations like this. This is an example, first of all, to bring the price down. In fact, here we can see maybe around 62 to 55, some zones where liquidity is intensifying, which means that, in my opinion, the previous analysis I gave you about a return below $60,000 is quite likely. But why is that? Because when the downward movement ends and bullish divergences start to form, whether in volume, RSI, or any other indicator, it's likely that this liquidity above, potentially at 71, 72, and so on, could later be used as fuel to create a more pronounced short squeeze. As a result, I wouldn't necessarily wait to see the price. It doesn't have to reach above $71,000 or $72,000. It could happen, yes, but I wouldn't necessarily expect it to happen for sure. In fact, I would actually be more optimistic if it didn't reach that level now, but if this liquidity above $70,000 were left untouched, the price dropped below $60,000 and a greater accumulation phase began, only to then rise above that level again later this year. If this were to happen, in the event that the price first drops below 60 and then returns above it, it would, let's say, get an even bigger boost, greater growth, and stronger upward momentum precisely when it goes to capture this type of liquidity, because it acts as a boost. So now, let's say, crypto update. Overall, I remain fairly bearish, not necessarily in the next few days, but from now to the next few weeks. Maybe a month, maybe two. Why is that? Because I expect that the lows at 60,000 will be broken to the downside. Now let's move on to oil. Oil, which has been bullish for quite some time now. Yes, in my view, it was behaving like a sort of bullish accumulation. Is it true that it has already broken out now? In recent weeks, I had posted a particularly bullish analysis on oil. Now, quite unlike the typical short-term traders who might have been feeling very bullish but were actively using, or at the very least waiting for the potential news regarding the outbreak of the war, to sell the news. Instead, I expect that this is more likely to be a sort of medium to long-term reversal. Why? Because as we can see, basically since 2021, this type of bearish divergence has finally broken to the upside. And usually when things like this happen, the price tends to have a medium to long-term directionality, literally bullish, and, let's say, a trend reversal. This is the Brent crude future. Another thing related to this analysis. So for quite some time now, now I'll show you a few things. I was expecting some companies linked to oil, bullish. Why? Here's an example with Oxy. Here it was worth $47 if you go and check. On December 2nd, it was worth about $47, and I did an analysis again within the premium group, which if you want to join, you can find the link in the description, where I said time frame, 2 weeks, breakout, upward movement of a long-term resistance on the OBV. This was a resistance that had been in place for several years, and in fact, from $47 back then, now today in pre-market we've reached 56. That is about a plus-sized increase. Let's take a look. About a plus 20-something percent, okay? And in fact, both the breakout and the continuation to the upside actually happened for oil, and as a result for this as well. An interesting thing was that since around 2002, it had a very significant volume support, which I actually explored further in an analysis also in the group, which then led it down toward the lows toward here, then a breakout, a sort of bullish divergence, bullish pressure, which then led to a kind of macro bullish reversal. Besides that, I also invite you here to look at the RSI of Oxy, which ever since 2005, let's say, always remained below this macro RSI resistance, even making false bullish breakouts like this one. Later on, here it broke out in 2022 after the geopolitical tensions between Russia and Ukraine and retested these areas. Okay? In these areas on smaller time frames, you can see clear bullish divergences that then led to this kind of very sharp rebound. From the lows at $36, now we're at 56. Now, personally, this is not the short-term analysis. Why? Because when structures like this are formed, bullish ones, especially with a breakout of this level, it's not for a short-term move, but usually for a more medium to long-term positive movement. All of this evidence leads me to the conclusion that it is highly probable that this specific type of analysis on oil is also not merely a simple short-term analysis, but rather something that involves more of a medium-term or even a long-term perspective. And consequently, if this is a more medium to long-term analysis, it makes me think that probably the tensions between America, Iran, and Israel won't be something that will last only a short time. I don't think they'll last only a short time. Instead, I think they could extend more into the medium to long term. Also because very often finance anticipates movements that then end up happening geopolitically. Now I invite you, in addition to this analysis on Oxy, to also take a look at this one on CVX, another oil company. Here we were on the 25th of January. Here on the 25th of January, CVX was worth, if I'm not mistaken, $166. Let's check right away. So, February, no, January. Here it is, 27, 26, 25, right around here, 166. From around 166 to now, that's about a 16% increase. And basically, what was the analysis? I saw strong bullish divergences in terms of volume across this entire macro structure, which then led to a bullish breakout and a continued upward trend. Moreover, this is a sort of mega bull flag, which then indeed led to the breakout and continuation of the bullish move. This too, connected to the analysis on Oxy and the analysis on oil, was correct, precisely because when oil prices rise, all the companies related to that sector, such as Chevron, Oxy, ExxonMobil, and so on, were all very positive. Furthermore, in addition to those points, let's quickly take a look at conducting a more detailed analysis of the current Chinese market. Unfortunately, after the significant market pump I caught earlier this summer, which happened with many major Chinese companies such as the giants Alibaba, Baidu, and several others, including the platform Bilibili, this RSI has now reached the opposite side, okay? Here. When it hit this resistance, around these levels, I started to offload a lot, always within the premium group, where you can easily find all the analyses. I began to offload many positions in the Chinese market, taking profits. Still achieving excellent performance because this wasn't a minor move. It was very, very significant. The same thing happened with Chinese companies as well, which, for example, Baidu almost doubled. Now, when it reached this level here, and it retested this area, at the moment it was no longer able to stay above this support. Macro, which at the time was around $36 to $37, confirmed a bearish breakout, breaking through all the supports. And then it actually went down. And again, within the group I wrote, K-Web chart remains above the long-term 4-day volume support. At this point, it was still above it. On February 4th, I updated saying K-Web is breaking downward, showing weakness. This could lead most of the Chinese sector to decline. And in fact, then all of China, Alibaba, JD, Pinduoduo, practically almost all Chinese companies, from that point started to drop more sharply and with greater aggression, and indeed, here the price continued to fall. Now we've reached a graphical support level. We really need to see how it will behave, whether it can bounce or not, but for now, I don't see the situation in China as very positive. So this is just a quick update regarding the sector. A bit in general then, BTC, Nasdaq, oil, and so on. Now still within the premium group, again the link is here in the description, we analyze a lot of stocks. For example, here's Coinbase, analysis from the 26th of January. Coinbase company, price is on a historic daily volume support. If it doesn't break downward, a good upward move could start. At the moment when this support was broken, as you can see, it was a support from the beginning of the bull market. When it was broken, it accelerated downward, dropping from $211 to $140. So general analyses like these also give you a sort of, how can I say, planning or at least a mental picture of where the supports are. And the main resistances which, when the market breaks through them, cause it to accelerate in one direction or another. Okay, in one way or another, meaning if it's a support and it gets broken, it accelerates downward. If it's a resistance and it gets broken to the upside, as in the case of oil, it accelerates upward. It's the same thing here with Robinhood. Weekly time frame, the RSI has broken down. This one had already broken down. If it doesn't recover quickly, it risks being weak and turning bearish in the medium term. At that time, it was worth about $107. And then, as the weeks went by, it dropped to $69. Another example where, when certain supports are broken, the price then accelerates. Another analysis on MP materials here. As long as it stayed above this support, the RSI remained bullish. And in fact, looking at the chart updated to today, it still remains above that support. And for now, this company still remains bullish. These, of course, are just some examples of all the analyses that we find that you could find within the premium group. And that's it, just in case. If you want much more in-depth analyses on the stock market and also the credit market, of course, you'll find them in the description. See you in the next video. I wish you a good day. Take care.